Well, good morning, ladies and gentlemen. We've got Dr. Andrew Wilson with us for another episode of the Wilson Weekly and insight into the Australian residential housing market for the Infinity family. I'll be stepping in for Graham today, and Doc will be going through the data with us once again. Hey, how are you, Doc?
Yeah, I'm good, Glenn, and good to have you here as Graham's temporary replacement, perhaps. But no, it's all good, and we've got some really interesting news today for everyone. We had of course, we have our usual auction market report, which just keeps on keeping on. Remarkable results, really, from our end of winter housing markets, auction markets. We're only 2 weekends away from the spring selling season. You look excited, Glenn. So yeah. It's and that's, of course, when that's our strongest season of the year, and we've had a really good run into it to this point of time. So good news there, and we'll go through that in some depth. But the major economic news that we had out this week, Glenn, was the wage index data, and that's an ABS series that reflects on what's happening with wages. It's a little backward looking. It's June quarter data, but it is the latest data. But it obviously is very important in terms particularly of inflation. And we know higher wages will drive higher prices as bosses have to cover the cost of higher wages. And wages tend to rise, obviously, when you have a very strong labour market, as we do at the moment, Glenn. Of course, we have a record strong labour market at the moment in terms of the unemployment rate. But we had some very interesting results come out. We were expecting a surge in wages, as a result of that strong labour market. But we didn't get that. So I don't want to give too much away. But it is very interesting because, as I said, higher wages fuel inflation. And we would have expected to see wages continuing to rise, particularly with this strong labour market, but we didn't see that. So perhaps we should get into it, Glenn.
Yeah, let's get into it.
Oh. Let's get into it before I give too much away and run out of things to say. But
stay tuned.
Stay tuned, My Housing Market, our latest economic and housing market commentary. And we've got some interesting insights today, as well as the wage index data. We're going to look at the latest results from our major regional housing markets, Glenn. So that'll be interesting as well. So stay tuned. So, yes, the national wage growth was really good news for interest rates. So that's got to put a smile on the dial of everybody out there that has a mortgage. We've been, positively encouraged by the Reserve Bank's decision over 3 of the past 4 months to leave interest rates on hold. Bit of a surprise because we've still had, although inflation has been easing, it's still quite high, of course. It's well above the target range. Underlying inflation is still floating around 6% per year, and the target range is 2 to 3%, so double the target range at the moment. But despite that, the Reserve Bank's decided to put rates on hold back to back, and we also had rates on hold over April. So that's probably given predictions at the beginning of the year are certainly something that wasn't expected. And perhaps some, questions for the Reserve Bank. Why are you pausing interest rates when inflation is still roaring along, even though it certainly has fallen? But the national wage data, wages, as I discussed before, Glenn, are very important in terms of inflation. If we have wages rising strongly, obviously the response from employers is to cover those increases in wages with higher prices. And we've certainly seen that occurring in the USA and in the UK as well. But when we look at the actual numbers, Australia's wage increases are well below those of the US and the UK, which is interesting because we do have a different wage setting environment here in Australia, and that helps to keep a bit of a lid on wages growth. Typically, we have wages set over an annual or sometimes even a 2-year period. That's when you get to ask the boss for more. You have to wait a year, and sometimes you have to wait longer than that, 2 years. And we have productivity-based wage setting scenarios. In other words, you've sort of got to prove that you've earned or that you've produced more to get paid more, which is enterprise bargaining, which is a positive because it avoids those outbreaks in wages that aren't supported by productivity gains, and therefore we don't have the scenario where prices have to rise to cover higher wages, because the theory is, the practice is that the employer has improved their position, so therefore they can afford to pay more without having to fuel inflation through higher prices. So Australia is in a good position in terms of the way it does set wages. It's what we call sticky. It doesn't respond straight away to stimulus such as higher prices. And of course, this is different in the US, where in the US they have a much more real-time response to changes in circumstances in terms of wage setting. In the US, as inflation is rising there, as everywhere else, you can sort of just rock along to the boss and say, "Hey, I want more money." You're not constrained by those bargaining processes that we have in this country, and therefore the employer has to respond if there is a shortage of workers and push up and cover those extra wage demands, and then cover them by pushing up prices. But US inflation is actually lower than Australia's at the moment. So it's not all a nice set little plan. Doesn't always go, as you would expect in theory. But that's the background here. Wages are very important in terms of inflation. And of course, inflation is very important in terms of interest rates. And if we had to see wages accelerating, then it would have worked its way logically into higher prices, which meant that we would have had to see perhaps the Reserve Bank step in and continue to increase interest rates. Not saying they won't do that, but certainly this is good news on that front going forward. But let's firstly be mindful of two factors here. Firstly is that this is June quarter data, so it's covering April, May and June. And hey, we're 2 weeks away from September. So it is a little backward looking. And we still have some issues regarding the seasonal adjustment models for the reserve, for the ABS. Of course, seasonal adjustment adjusts the data according to the time of the year, because some months are weaker months because of holiday distractions, etc., and some months are stronger months because they come off the back of holiday months. So, but of course, all that was sort of turned on its head because of the COVID shutdowns. When we had weaker months, became stronger months became weaker months, and the ABS has to rely on that historical time series to make their adjustments for seasonality. So those seasonal factors have been questionable this year to some degree, not just with this data here, but with most of the ABS data. So we maybe have to take it with just a grain of salt, these seasonal adjustment figures. But they are what they are, and we can only really use them going forward. But we need to, as I said, take it with just a grain of salt. So again, the National Wage Index, I've done a very big preamble here, so it's I'll get into the main data. It's really winding it up, drum roll. But the National Wage Index increased by 0.8% over the June quarter. That's the same result as we had over the March quarter and over the previous December quarter. So quite steady results over the past 3 quarters in terms of wage increases per quarter, 0.8%. And of course, if we multiply that by 4 to give us an annualised result, we get to 3.2%, which is, again, quite a subdued result given how strong our labour market is at the moment. So we actually had the annual increase from the June quarter this year to the June quarter last year down, still increased, up by 3.6%. But the actual rate of increase fell to 3.6 from 3.7. So some interesting results there. Now, we currently have an unemployment rate of 3.5%. That is a record low unemployment rate on the monthly series that we do. We have to go back to the early 1970s to get a similar result. Of course, Australia was a much different place then. It's just fantastic. Labour market, the latest data, the June labour market data, showed that we had another surge in jobs created over June following a surge in May. We had another big fall in the number of unemployed compared to May, where we also had a big fall in unemployed. And our participation rate also remains, that's the proportion of people from the workforce actually in work, that remained at near a record high. So it really doesn't get any better than that, Glenn. And yet we had wages growth falling, the rate of wages growth falling over the year. So as I said, firstly, we are Australia has this more of a sticky, environment for wage setting. But we need to maybe just consider there might be some issues with the seasonal adjustment model from the ABS. But certainly good news there, because I was expecting a result pushing towards 4% annualised, and I certainly was surprised to see a fall, from 3.7 to 3.6. But this is very good news if it holds up in terms of interest rate outlooks, and it would have the Reserve Bank feeling pretty good about what it's done over the last 3 months in terms of pausing interest rates. So, we have our next inflation data out in 2 weeks. I think that would have to be a bit of a horror story for the Reserve Bank perhaps to step in again. This is certainly a positive tick to continue to pause rates with more data to come. Of course, we have the latest unemployment data to come out this coming Thursday, so we'll look at that next week. But this is a good result given, as I said, this is June quarter, a little backward looking. But for those continuing to be concerned about the prospect of higher interest rates, this certainly is a fillip for those looking to continue to have a pause in interest rates. And just by comparison, Glenn, we have in the US, wages are rising by 6% per year in the US. And in the UK, it's over 7% wage increases in the US, in the UK. So that's well ahead of what we're experiencing. Again, it's a very heavily unionised workforce, the UK, of course. So that tends to have more leverage in terms of real-time wage outcomes. And as I said, it's a more real-time market environment in the US. So they have a much quicker response to wage increases. But unequivocally good news, bit of a surprise, as I said, given how strong our labour market is, and a lot of anecdotal evidence around about, workers being able to bid up their wages. And, some of the wages we hear that are being offered around now are really sort of mind-boggling to some degree. But the official data's in, and it's telling us actually that the rate of annual wages growth has declined from 3.7 to 3.6%. And there's the track. You can see it's a little unusual. We're now below and falling below where we were at the previous wage peak back in 2011, where wages peaked at 3.9%. I thought we would at least match that in this series. We may still do it. But really, once we do start to see that wage cycle ease, it usually foretells the beginning of an easing cycle. I don't think that's going to happen, and maybe it is just a blip downwards in the series. But as I said, unequivocally good news for those concerned about higher interest rates and concerned obviously about inflation going forward. So it's one of the key factors that the Reserve Bank will be looking at in terms of interest rates. And if we look, this is interesting also in regard to what's happening in terms of each of the states. It's interesting that the worst performer there was New South Wales over the year, with 3.4% increase, which of course is below that 3.6% national result. But New South Wales, Sydney, has the strongest labour market in the country. Its unemployment rate is hovering around 3%. And yet it had the worst wage outcome, only up by 0.5% over the quarter. So, quite interesting there that Queensland and Western Australia had the best results over the year. Western Australia up 4.2%. Whoa, big result there over the year for Western Australia. But I did think it was interesting that that New South Wales, with Sydney having the strongest economy in the country in terms of the lowest unemployment rate, had the lowest wages growth. So who can figure? Again, we have to look forward to the next results, but that's not going to come for 3 months. So it's all a bit backward looking. But yes, as I said, some good news there, even though it's maybe slightly questionable, some of these results on the data, but certainly some good news there in terms of the outlook for interest rates. I'll just have a quick sip of water.
Very good, Doc. Yeah. Thanks for all the data. Hope everyone's listening very closely.
Well, look, it's all part of, the jigsaw puzzle that we put together in terms of property decisions, particularly. You need to be able to look at the data as it comes through to add to, I guess, your decision-making process in terms of property. And obviously, higher interest rates are a negative for mortgage holders. It makes property more expensive with a given income. But this data clearly is a positive in terms of the outlook for interest rates for those, thinking about the property market going forward. But we've got, as we usually do in the second week or the third week of the month, we look at the top regional markets on a state-by-state basis. Again, re-emphasise, nothing much has changed here because we focus on what's happened over the past 2 years. And as we've discussed previously, we can see that the lower priced markets have done the best over the past couple of years. So affordability is driving buyers into those markets. Dubbo up 28.4% over the past 2 years, Glenn, which is the top performance, and Wagga Wagga up by 23.3% over the past 2 years. But everywhere except Ballina has recorded strong growth over the past 2 years. Again, it reflects the preeminence of regional markets that are more affordable than others going forward. So that's the New South Wales story. When we look at Victoria, growth not quite as strong there in the top performers in Victoria. Again, perhaps favouring lower priced areas in the sense of Latrobe, which of course is to the east of Melbourne. It had an increase of 17.1%, but Bendigo, a good result there over the past year, 17.8% Bendigo. Macedon Ranges has been quite strong, particularly recently. So the Macedon Ranges is now pushing towards $1 million median house price, up by 8.7% over the quarter. And this is the July quarter, and up by 10.6% over the year. So some interesting results there for the Macedon Ranges. Very strong position. Of course, that's just to the north of Melbourne, northwest of Melbourne, and it's certainly a gentrified or gentrifying area, rural area that's now attracting a lot of buyer interest from Melbourne itself. So strong results there for Macedon Ranges. Similar to New South Wales, to some degree, Queensland's top regions were the more affordable regions. But look at some of these numbers over the past 2 years for Queensland regions. And, of course, this does reflect that, that firstly, the COVID surge out of New South Wales and Victoria, those that were leaving because of severe lockdowns. We know that created a boom in southeast Queensland, but it's also spread its way into some of the regional centres. Bundaberg up by nearly 40% over the past 2 years. And the Fraser Coast, of course, the lifestyle market there in the Whitsundays, up over 40% over the past 2 years. Again, affordability, it has driven those markets. You can see there pushed up strongly, but still with medians at around about 500,000. Noosa has sort of broken that model because it's the highest priced market, up still by 30%, even though it's down 10% over the quarter. But that's just an adjustment process from what was scorching price increases in that Noosa market. And, of course, Toowoomba also a strong result there, adjacent to southeast Queensland or Brisbane, the greater Brisbane area, up by 32%. So big results there in Queensland for the regions, and no surprise because given we know how strong the Gold Coast and particularly how strong Brisbane has been as a result of those migration surges. And the Brisbane market's starting to pick up again. So even though sky high prices in Brisbane haven't affected the market too much in terms of affordability, as that market's taking off again. Look at some of the smaller markets here. Glenn, Tasmania, top performer there, Launceston up by 13.8% over the past 2 years. Glenorchy up by 6.5%. Darwin led the charge in volatile market circumstances, and the Northern Territory up by 6.9%. Palmerston flat over that period. So that's our regional update. Interesting for those that do look beyond the capital city models, and we do provide that here. So you can see what's happening in your local area or areas that you're interested in. So as I alluded to before, Glenn, we are looking at our weekend auction market results as usual to finish off. And again, some very strong results. Late winter weekend auction markets are still standing tall despite the distractions, which are starting to ease, of course, from the holiday period of July and into August. Clearance rates are still favouring most sellers, which is quite remarkable for this time of the year. So there's plenty of energy in our housing markets, even through what is typically the quietest part of the year, although August we always see in August the beginnings of the revival. I guess we could call it the green shoots of the spring selling season. And we've certainly seen that really over the past few weekends. So another positive weekend for our capital city markets. And the results through August are likely to bolster the spring selling season going forward, particularly given that we'll start to see a lot more higher priced properties coming into the market through spring, through September onwards. That's the time of the year where we do see those mid to higher price properties very active in the market. They tend to be inactive during July and August, but we'll certainly see much higher stock levels at that end of the market, which is still hasn't performed as well as the lower priced properties, lower priced property market segments. So I think there's plenty of upside there for that end of the market, but that all will be revealed over the spring selling season, over the months to come. But certainly a good introduction to the spring selling season from what's happened with auctions over July and certainly into August. So these are the results from the weekend, Glenn. Sydney had another rise in auction numbers, nearly 700 auctions in Sydney. Good result, good numbers. And that's one of the interesting things we've seen, Glenn, over the past month or so. There's been a big rise in listings. And you sort of can't blame it on sellers, panicking and wanting to sell their property because they're worried about the housing market, because we know every measure out there tells us that prices are rising again and have been rising for months. So this is about, I guess, a lot of that pent-up demand still coming through that was there through the scare campaign last year at higher rates. And also those sellers wanting to take advantage of strong
window of opportunity. Yeah.
That's right. Strong competition amongst buyers for property. I mean, all you have to do is go to auctions today or on the weekend, and you see, a number of buyers out there per property. And of course, only one can win. There's only one buyer, and the rest are have to look for something else. And that's why higher clearance rates translate into higher prices. But Sydney, another strong result in terms of the clearance rate, 77.2% clearance rate, a little bit up on the weekend before, despite higher auction numbers. Again, these are certainly those green shoots for the spring market. But nearly 8 out of 10 properties selling under the hammer in Sydney are very good odds for sellers, and obviously is translating into higher prices. Melbourne also had another jump in listing numbers, auction numbers, over 700 auctions in Melbourne. A similar clearance rate, 73%, not quite as strong as Sydney. But again, it is the winter market in Melbourne. And Melbourne's auction markets tend to be more characterised by higher priced properties, and we will see that part of the market reinvigorate over the next month or two. But 73% is still a very good result generally for sellers. Brisbane up after the pause for the previous weekend, 63% clearance rate with nearly double the listing numbers. Another 80% plus result in Adelaide. Keeps on keeping on with those big numbers. And Canberra has also continued its revival. That's been there really for the last month or two. So all good news there, just about for most sellers, and certainly a very good prelude to the spring selling season. So we've got 2 more weekends, Glenn. Let's see if that energy continues to rise in our auction markets. But certainly we should have plenty of confidence about the state of our housing markets. And
plenty of resilience there.
Plenty of resilience. And you can see when we track our monthly auction clearance rates, this is the full month results for weekend clearance rates. Sydney's actually tracking higher now over the first 2 weekends than it did over July. So that's pretty spectacular, sense of revival in the market through winter. Melbourne around about the same as where it was over July over the first 2 weekends of the month. Adelaide still at 80%. Brisbane has improved and certainly higher than where they were a year ago, that Brisbane market, after having a holiday pause last weekend. Adelaide just keeps on surging above 80% and higher than where it was a year ago. And the Canberra market has had good results, and it's also tracking higher than where it was, significantly higher than where it was a year ago. So if you want those auction clearance rates, it's the latest data. Glenn, look on my LinkedIn account every Saturday night at around about 6:30. We reveal the latest capital city auction clearance rates, and on Sunday mornings we send out our full report of the national auction results, including regional breakdowns in Sydney and Melbourne. So we've sort of finished all our data, Glenn, you'll be thankful for. So, but as we always mention, just as a little bit of an extra for viewers out there, is that that Graham and Infinity offer the My Housing Market house price app, which covers every suburb in the country that has a listing for both rents and prices. These are asking prices and asking rents, and they're updated in real time. So it's telling you what's happening right now in the market. And it's the data is filtered for the number of, it's filtered for property types. So townhouse, unit, house. You can also filter the data for the number of bedrooms, and it covers every suburb in the country that has a listing. So look out for that one. It's a really good tool set. Part of the tool set for your decision making, because you can see what's happening in the market on a real-time basis. And it also shows you the number of listings, both rental listings and properties for sale, as well on a suburb-by-suburb basis. And it gives you the median price, the high price and the low price for each suburb, for each of those property types. So a good one to get hold of. That's the QR code that will take you to the link to it, but you have to go through Graham and Infinity to get the password to access it. So there's some incentive there to join Graham's group and get this freebie in terms of a great little app for the Australian housing market. So that's it for this week. Glenn, and we have next week, of course, as I alluded to, we have the July labour market data out. Will it add to the good news from the wage index data? Although, as I said, a little backward looking. But certainly that labour market has had 2 amazing months in terms of results, May and June. Will it continue over July? We'll reveal that next weekend. We also have the latest average weekly earnings, which I think we'll have a look at just to see if that correlates with what we're seeing with the wage index. So these are average weekly earnings. We'll have a look at that on a capital city by capital city basis. And that's for May. So again, it's backward looking, but it still gives us a sense of what's happening in terms of earnings outcomes on a capital city basis. We'll also have a quick look at the mid-month home prices. So how are house prices, home prices tracking? Well, we will look at house prices tracking over August so far. So that'll give us an indication for what we'll reveal in 2 weeks after that with the final results. And, of course, the latest weekend auction results. So an interesting week for data, perhaps a bit skewed towards economics, which I think we do more or less anyway. But I think we've got some good news there from that wage data in terms of the outlook for inflation and for interest rates. But we still have more data to come to reveal that full picture. But it is making the Reserve Bank, I guess, feel a little bit relieved in terms of their recent decisions to pause rates. So that's all from me, Glenn. It's been good to have you here today.
Yeah, thanks for your time, Doc, and sharing your information with the Infinity family and the data to make some informed decisions into the housing market. So
all
fantastic.
good, mate. And we'll be here next week as usual. So let's catch up then.
Perfect, Doc. Appreciate your time, and talk to you soon.
See you, mate.